Welcome back to the Coverage Council, your go-to channel for making insurance simple, smart, and totally understandable. Today, we re-tackling a term you've probably heard a million times: full coverage car insurance. What is it, really? Do you actually need it? And most importantly, how can you get the right protection without breaking the bank? Stick around because we're going to break it all down. First things first, let's clear up a common misconception. If you walk into an insurance agency and ask for full coverage, they'll know what you mean, but it's not an official product. There's no single policy called full coverage. Instead, it's a popular phrase people use to describe a combination of different coverages that offer broad protection for you and your vehicle. Think of it like a value meal at a fast food restaurant, rebundling several items together for comprehensive protection. So, what's usually in this bundle? The foundation of any full coverage policy is liability insurance. This is the part that's legally required in almost every state. It covers bodily injury and property damage you might cause to other people in an accident. If you re-rent someone, your liability coverage pays for their car repairs and their medical bills up to your policy limits. It protects your assets so you don't have to pay out of pocket if you're found at fault. But liability only covers others. What about your own car? That's where the next two key ingredients come in: collision and comprehensive coverage. Collision coverage is exactly what it sounds like. It pays to repair or replace your car if it's damaged in a collision with another vehicle or an object, like a fence, a tree, or a telephone pole. It doesn't matter who was at fault. If you hit something or someone hits you, collision coverage is what fixes your car. Then there's comprehensive coverage, sometimes called other than collision. This protects your car from damage caused by things other than a crash. We're talking about theft, vandalism, fire, falling objects like tree branches, hail, floods, and even hitting an animal like a deer. If you wake up to find your car has been stolen or a storm knocked a tree onto your roof, comprehensive coverage is your safety net. When you put these three together, liability, collision, and comprehensive, that's the core of what people mean by full coverage. It ensures you're covered for damage you cause to others, as well as most types of damage to your own vehicle. But a truly robust full coverage policy often includes several optional add-ons. Let's run through the most common ones. First up is uninsured or underinsured motorist coverage. This is a big one. It protects you if you're hit by a driver who has no insurance at all, or not enough insurance to cover your medical bills and car repairs. With so many uninsured drivers on the road, this coverage is incredibly valuable and often a lifesaver. Next, you have medical payments coverage, or MedPay, and personal injury protection, or PIP, depending on your state. One of these will be available. They help pay for your and your passengers' medical expenses after an accident, regardless of who is at fault. PIP is more extensive and can also cover things like lost wages if you couldn't work after a crash. Then there are the convenience coverages, roadside assistance, is a popular add-on that helps with things like flat tires, dead batteries, running out of gas, or needing a tow. It's usually very affordable and can save you a lot of hassle. Rental reimbursement is another great one. If your car is in the shop for repairs after a covered accident, this coverage helps pay for a rental car so you can still get to work and run your errands. It keeps your life moving while your car is being fixed. For those with a car loan or lease, there's gap insurance. Cars depreciate fast. If your car is totaled, your collision coverage will pay you what the car is worth at the time of the accident, its actual cash value. But that amount might be less than what you still owe on your loan. Gap insurance covers that gap, so you're not left making payments on a car you no longer have. And finally, for newer cars, some companies offer OEM parts coverage. This ensures that if your car needs repairs, the shop will use original equipment manufacturer parts made by your car's brand instead of cheaper aftermarket parts. So, now that you know what's inside, the big question is, do you need it? The answer really depends on your personal situation. Full coverage is almost always a must-have if your car is financed or leased. In fact, your lender will require you to have collision and comprehensive coverage to protect their investment. If you let it lapse, they can buy a policy for you and charge you a fortune for it. It's also highly recommended if your car is newer, say less than 10 years old, or has a high market value. Ask yourself this: if your car were totaled tomorrow, could you afford to replace it out of pocket without financial strain? If the answer is no, you probably need full coverage. Similarly, if you rely on your car every single day for work or family responsibilities, you can't afford to be without it. The cost of repairs or replacement could be devastating. On the other hand, if you drive an older car that's fully paid off and has a low market value, say, it's worth less than a few $1,000s, then full coverage might not be cost-effective. The annual cost of collision and comprehensive premiums could end up being more than the car is even worth. In that case, you might consider dropping them and just keeping liability coverage. A good rule of thumb is if your annual premium for collision and comprehensive is more than 10% of your car's value, it might be time to reconsider. Alright, let's say you've decided you need full coverage. How do you get the right policy without overpaying? It's a process, but a simple one. Step 1 is to know your state's minimum requirements. This is your starting point. You can find this on your state's DMV or Department of Insurance website. This will tell you the minimum liability limits you must carry by law. Step 2 is to build your coverage. This is where you add collision and comprehensive to that liability base. Now you have to choose your deductibles. A deductible is the amount you pay out of pocket before your insurance kicks in. For example, if you have a $500 collision deductible and your car has $3,000 in damage, you pay the first $500. Step 3 is to consider those extra protections we talked about. Think about your personal needs. Do you have good health insurance? Maybe you don't need high MedPay limits. Do you have a long commute? Rental reimbursement and roadside assistance could be very useful. Do you have a new car loan? Gap insurance is a smart move. Add the coverages that make sense for your life. Once you know what you want, it's time for step 4. Shop around and compare quotes. Never ever take the first quote you get. Prices can vary by hundreds or even thousands of dollars between companies for the exact same coverage. Use online comparison tools and contact at least 3 to 5 different insurance companies directly. Make sure you're comparing apples to apples, the same coverage levels, the same deductibles, and the same add-ons. Step 5 is all about discounts. Don't be shy, ask every single agent what discounts you qualify for. There are tons of them. You can get discounts for bundling your car insurance with your home or renter's insurance, for being a safe driver with a clean record, or for low mileage if you don't drive much. Many companies offer telematics programs where you use an app that tracks your driving habits and rewards you for being safe. There are also good student discounts, discounts for taking a defensive driving course, and savings for having anti-theft devices installed in your car. These little discounts can add up to big savings. And the final step, step 6, is to review your policy regularly. Don't just set it and forget it. Your needs change, your car gets older, and insurance rates fluctuate. It's a good idea to review your coverage and shop around again every 6 to 12 months. Or whenever you have a major life change like moving, buying a new car, or getting married. Now, let's talk numbers. What does full coverage typically cost? This varies wildly, but on average, you can expect to pay somewhere between $1,200 and $2,500 per year. The final price depends on many factors: your age and driving history, where you live, your credit score in most states, and, of course, the make and model of your car. A young driver with a sports car in a major city will pay a lot more than a middle-aged driver with a minivan in a rural area. If that price tag makes you nervous, remember there are ways to lower it. The easiest way is to raise your deductibles. Going from a $250 deductible to a $1,000 deductible can significantly reduce your premium. Just make sure you have that $1,000 saved up. You can also work on improving your driving record, avoid tickets and accidents. And as your car gets older, you can reevaluate if you still need every single add-on. Finally, a quick word of caution. As you shop, watch out for a few red flags. Be wary of any policy where the deductibles are unclear or hidden in the fine print. Be suspicious of super cheap quotes that seem too good to be true. They might be cutting corners on essential protections like uninsured motorist coverage. And be careful of agents who use high-pressure tactics or try to push coverages you've already decided you do need. A good agent should be a trusted advisor, not just a salesperson. So there you have it. Full coverage isn't a magical one-size-fits-all policy. It's a customized bundle of protection that you design to fit your needs and your budget. By understanding what liability, collision, and comprehensive cover, and by thoughtfully choosing your add-ons, you can build a policy that gives you true peace of mind on the road. You'll be protected from accidents, theft, weather, and all sorts of other unexpected surprises. Thanks for tuning in to the Coverage Council. We hope this guide helps you feel more confident when shopping for car insurance. If you found this video helpful, please give it a thumbs up. Drop any questions you have in the comments below. And don't forget to subscribe for more simple, smart insurance advice. Drive safe.